Okay.
Alan, do you want me to run the poll now?
No, not yet. We'll do that.
Okay.
We're going to do a poll a little bit later, and that's going to be for potential topics that we will use for next week, or next month, I should say. Oh, by the way, we're changing the date of the meeting effective with the August meeting. It'll be the second Thursday of the month. And from that point going forward. But before we go any further, I want to just review the rest of the agenda. And as I said, Rich is going to talk about using of the funds from an internal perspective. But also, the two top topics from the last month were what has changed in your business and what needs to change in your business. And we're going to take those, they were so similar that what we decided to do is we'll talk about the first one for a little while, and then we'll we'll then rotate that to the second topic, which will be what needs to change, so we can have a round robin discussion from people just sharing their thoughts and looking for some ideas in terms of how they might potentially be thinking about where we are today, because we know and everything we read says we are in the new normal. We're not worrying about what do we do about COVID. We're in the middle of it, and as we see what's going on in the rest of the country, thank God we're in much better shape. But what we're also learning is that, you know what, this thing's going to last longer than we thought. So part of our issues are going to be, okay, what do we do now? We know there's going to be some permanent changes to our business. And the bottom line is going to be, how does that affect each of us? And so with that, Rich, if you're ready, I'd love to turn it over to you to start the discussion.
Sure, very good. I am not muted, correct?
You are, absolutely. We can all hear you.
All right, very good. So good morning, everybody. For those of you that don't know me, my name is Rich Hauser, and the name of my business is Rai CFO Controller and Bookkeeping. We are a fractional or an outsourced accounting department for our clients. We are not a CPA firm, so we don't do taxes. As much as I appreciate the emails I've gotten from people saying, I hope tax season's going well, that has no bearing on us. As Alan said, we're going to talk about some things related to the government funding programs. And I am going to talk about some of the elements of the program and some of the changes that continue to evolve, and interject there with some of the strategic uses of those funds and things you might want to consider depending on what this business situation is that you have. There are a couple of great resources in terms of if you need to look something up. One is the SBA website, it's sba.gov, and the other great one is the U.S. Chamber of Commerce website. So we'll talk first about the PPP program. I'm sure many of you have heard different things about the program. The premise of the program was to keep people employed, keep them on payroll, and to help smaller businesses with certain operating costs. So this is administered through banks and other financial institutions like Cabbage.com as an example, but ultimately it's monitored by the SBA. So everything the banks are doing has to flow through the SBA. This loan, the PPP loan, because it is a loan when it's processed, can be converted into a grant, meaning that you do not need to repay it if certain rules are met. So money that is not forgiven and not converted into a grant must be repaid. The really good news is that the interest rate on this, if you are not able to get everything forgiven, is only 1% after a 6-month grace period. So it's a very nominal interest rate. There were, again, many changes that continued to evolve as this thing was rolled out. Vendors or 1099s are not included in this program in terms of things that you were able to include in your application. but vendors are able to apply. So if you're a sole proprietor, you are able to apply and receive some funding under the PPP program as well. The original expiration date was 6/30 for applying for this loan, but it has been extended until August 8th. I think on July 3rd, about 3 days after the program ended, they did extend it, and there were a number of changes that went along with that. So February 15th is a key date in this program. Any agreements and things that you're able to submit for must have been in place on or before February 15th. If they were not, you are not able to include them in the application and for the uses. Some of the key things in that area are utilities, leases, rental agreements, etc. I'm just as an example, and this sounds a bit counterintuitive to I think what the intent of the program is, but it is a rule. You could be in office space, and let's say that you were planning a move, and that move was planned for March 30th, right? If that lease was not in effect as of 2/15, you may have moved out of an existing lease into a new lease, but since that lease was not in effect as of 2/15, the rent which you are able to submit under the PPP would not be includable because that lease was not in effect as of 2/15. Originally, at least 75% of the money received had to be used for what they call payroll costs. And those are not just payroll. Those include things like health insurance benefits, state and local taxes, 401k or pension matching contributions. So it's not just pure payroll. It does include some other things that are related to employee costs. And the remaining could be used for things like rent, utilities, interest on certain types of debt. And the measurement period originally was 8 weeks. So some of the changes that have come about were that the forgiveness rules changed, and there is now a 24-week reporting period. So before you had to make use of the funds you received within 8 weeks in order to be eligible for forgiveness. Under the new rules, it was extended to 24 weeks. And the 75% rule for payroll-related costs was changed to 60%. So with those changes, and I've been on many webinars by some very large and very reputable CPA firms, the common comment has been that it's virtually impossible for one not to get 100% of their funding forgiven with these rule changes. The big exception is if you have laid off a significant number of people and have not brought them back, then you likely would not be forgiven. There are some other testing rules that I won't go into that minutia, but yeah, it is highly unlikely that you would not be able to have everything forgiven under these new rules. So a second element is what is called an Eidl Grant. Under the Eidl Grant program, originally people were able to receive $10,000 simply by applying. Again, some of the rules changed and they modified that to $1,000 per employee up to $10,000. All right. The really, really big change there is there are no restrictions on this money. If you've applied for and received this money, you can use that money for any type of expenses within the business, and it is a grant. It is not something you need to pay back or to apply for forgiveness. The other big element is an Eidl loan. All right. Again, this is a loan. There is no forgiveness aspect to this program. The expiration date for applying for this loan under the coronavirus program is September 30th. It is a loan from the government. As I said, there's no forgiveness. there is a slightly higher interest rate related to this. So for for-profit businesses, the interest rate is 3.75%. And for nonprofits, I don't know if we have any nonprofit organizations on this meeting, the interest rate for nonprofits is 2.75%. So again, unlike the PPP program, a company must be able to repay this loan. This is not a grant. The application process is a bit more rigorous in that there has to be the ability to repay the loan. The repayment period is much greater. The repayment under the EIDL is up to 30 years, okay? Under the PPP program, originally the payback period was 2 years. After a 6-month period passed, once you'd received money, and again, under the rule change, that was expanded now to 5 years. So, so some important differentiations. Under the EIDL, an organization must have less than 500 employees. They must do business in the 50 United States, and the loans can be up to $2 million in funding. Loans under $200,000 can be approved without a personal guarantee. So again, much of the EIDL is under the SBA programs. Acceptable uses of the funds are very different from the PPP. So again, in terms of if you need money or anticipate that you may need money, which is a big part of the strategic part, you can use the EIDL money for any operating expenses, unlike the PPP. Some of the exceptions are you cannot use the money for what they call physical repairs, expansions, debt refinancing, or bonuses, you know, that you're paying out to employees. And you must show a proof that you are economically being impacted. So a common thing is a loss of revenue. So you have to, there's some reporting for the impact on your revenue. We'll talk for a moment about PPP forgiveness. So technically you can apply for forgiveness now since the original last funding date was June 30th. The reality is that there's no rush to do this. I have a number of clients that have said, oh, Rich, you know, I want to be the first in line. I want to get the forgiveness and know where I stand. Well, the problem with doing that, and we've been advising our clients that there's no rush. The guidelines are still changing. They've not fully been determined. In fact, many banks are not ready to accept the PPP forgiveness applications. Bank of America, for example, has indicated that they will not be accepting applications until sometime in the first week in August. Again, the rules are changing, and then once those rules are determined, the banks have got to set up their process to receive and then to review that information. So recently there have been reports that many small business organizations have requested, lobbied with the government that the forgiveness process is overwhelming to them. And there is discussion about the possibility of PPP loans that are 150,000 or less being automatically forgiven. So there's not a rigorous proof and application process to get forgiveness. There would simply be a simple, as I understand, one-page document that an owner or an officer of the company would have to sign that may get that forgiven right away. And the deadline has been pushed back till 10/31. So, as I mentioned a few minutes ago, the PPP money can be repaid for up to 5 years now at 1% if you've received the funding after June 5th. All right, so June 5th is now another key date. If you've received the money prior to June 5th, you have a 2-year payback, and you have the option of using the 8-week measurement period or the 24-week period. All right, so you have a choice. So what can you do with the money? Again, the PPP was specifically designed for companies to keep people employed. I believe that what the government has done with the unemployment rules has kind of created an incentive for people to be on unemployment and for there not to be a motivation for people to come back. There is, if you're an employer, and I've got, again, a number of clients that have said, hey, we're ramping back up. I need to bring people back. I've reached out to them. They've said, nah, no thanks. I kind of like the unemployment and I'm making more in many cases than I did when I was not on unemployment. Well, you can't force somebody to come back, but if you properly document that you've requested for somebody to come back and they've declined, you won't be penalized in the full-time employee equivalent calculation, which is one of the elements of the forgiveness package. So it would be just as if you brought them back, and again, you won't be penalized. Frankly, under that situation, the employee, unless there are certain health situations, they're like they have COVID or they're taking care of somebody with COVID, they are technically no longer eligible to collect unemployment if you've offered them their job back. So if, let's say you have a situation, and there are varied situations here where some companies have received money, but they've been able to continue to work. They may have worked a bit less, but they've been able to continue to work. You may have some excess money, right? So I'll use our company as an example. We were going crazy in April, May. Frankly, some of the most stressful experiences I've had in my entire career, because everybody is looking to get the money. Money was running out at some period of time, but we continued to have lots of work to do. We received money, and we were anticipating that some clients may shut down. They may be adversely impacted and have a much less revenue, and that, in fact, is starting to happen. So the point is that you may have a situation where you've received money, you didn't necessarily need all that plus your other funds to pay the PPP qualified expenses. So what might you do with that money? Well, again, there are restrictions, but if you have other money, you can use it for any other operating costs. You might use it for marketing programs, right? How can we get messaging out? How can we support our clients? How can we continue to work on growing our business? You might need that money for things to set up a remote work environment. Now, fortunately for us, there was not a lot that we had to do differently to have everybody work at home. There are 11 of us. We have voice over IP phones, and with the hardware, people were able to basically pack things up, put it in a bag or a box, and go home and work from home. And that's worked relatively well for us. But you may be an organization that has not had that capability. So you might want to use that money to set yourself up so that you can operate remotely. Because maybe there's, this is going to continue for a while, or maybe there's going to be God forbid, a phase 2 or round 2 of the COVID coming back. So again, some strategic uses. You might want to do some training. There may be some people that are not used to some of the technology that may need to be used. I've heard a number of people, including Bob Mitchie, talk about the security threat while people are now working at home instead of in an office environment with the firewalls and different things that are in place. So you might choose to use some of that money for some protection, technology protection issues. And then there are, any other strategic uses. So again, if you have the excess money, and I have to emphasize this, you can't use PPP funds for these strategic things, all right? But if you have the ability to use it because you have other funds and you continue to have revenue, that's a balancing act. Another situation is, where you may not have that strategic ability, are the situations with the restaurants, some retail establishments that have not been able to be open. Maybe they've been closed, they've had to lay off or furlough people. Well, again, that money has to be used in order to qualify for the forgiveness. That money has got to be used for the things under the guidelines. And then we get to the Eidl money. As I said earlier, the Eidl loan money can be used for any operational costs except expansion and repairs and refinancing. So again, if you have some thoughts on some strategic things that you're looking to do differently, you know, I'll use 7-Stage Advisors as an example. Carl Gould and Alan and I were talking just last week for a while about, you know, some strategic applications. So again, it may be focusing on some management training and expanding the business. So under the Eidl loan, you could use the money for that. All right. Just want to touch on some misinformation briefly, and then we'll wrap this up. So this touched on a little bit of something Alan said earlier. Some people were being told that they have to keep a separate bank account for the PPP money. That's just simply not true. All right. All that you need to do for the forgiveness is to substantiate, to prove that you've used the money for payroll and for health insurance and to pay your rents. There is no need to have a separate bank account set up. Frankly, that's adding additional work and overhead that's just not necessary. Anybody with a real accounting department or some good accounting, internal accounting practices really doesn't need to do that. Some people thought that you could use that money to pay off a more expensive debt. So again, I'll take some of our clients as an example. They may have a loan or a line of credit at 5%, 7%, 8%. They're saying, oh, I've got this money. Even if it's not forgiven, it's only at 1%. I'll just use it to pay off my debt. You can't do that. All right. Again, under the rules and under any audits, that would be kicked out. Some people thought that if people were laid off or furloughed, that they can't get PPP money. Again, that's not true. The premise was to receive the funding and to pay for those things. So in some cases, people may have had to react and furlough or lay people off, and then they got PPP money sometime later, 2, 3, 4 weeks later, because the application was slow. It was, you know, the banking system was overwhelmed. If you're in that situation, you need to reach out, you need to bring people back, even if you don't have some work. So what some employers have done is they've brought the people back, they had the money to pay them, and they used that time to do some trainings to educate those people, maybe do some of the cleanup, reorganization of the business. So again, that's some of the strategic things that you could do, because you do have to use that PPP money to bring people back and to pay them. So, you know, those are just a couple of examples. You know, I'll touch on, again, examples with restaurants and other retail businesses. They may have laid people off. They're maybe still applying, because again, that window has been expanded until August 8th. They're getting PPP money now. They can start to bring people back and again, work towards the period where they're able to reopen. I know many of the restaurants in our towns have tables and tents set up on the streets and parking lots and so on. So hopefully that generated some thought and had some value. And Alan, I'll throw it back to you.
Yeah, Rich, you know, this is really interesting, because there are strategic things that people who understand finance and how to apply the finance have different skill sets than the people who have to account for the money and make sure that the whatever accounting system you're using, that the entries are made in the right places. Can you kind of discuss those different, the different roles that people have, that people with a finance background have within a company?
Sure. Those of you that have met with me may have seen a very cryptic drawing that I've done. I do a circle and a series of circles. At the core of that is the bookkeeping transactional work. Okay, a bill from a vendor comes in, it's got to be entered properly. So a big part of that is coding to the right account. So Again, some examples of things that I've seen when we get involved with a client, things as simple as payroll. We've seen situations where people are not recording the gross wages as payroll expense. They're recording the net, all right? So again, in terms of the reporting that you would do with some of the reporting agencies for the PPP, you'd be reporting bad information, all right? So within that inner circle is the transactional bookkeeping role. Outside of that circle is in an organization that has both a CFO and a controller, are the controller functions. So the controller is overseeing the transactional work. They're doing the monthly reporting of financial statements and monthly closings. They're typically the interface, again, where there's both a CFO and a controller. They're doing the interface with the CPA firms for things like audits or tax returns. The CFO function is outside of that and kind of, you know, in my drawings, the strategic element of that. They're looking at what business areas might we want to get into to expand the business? What areas might we want to get out of because we're not very profitable in that area? Do we need to raise some more capital in order to grow the business? What is the exit strategy of the business owner or owners? So that's kind of a picture of the different elements within an internal accounting department. The CFOs, frankly, in a public company, and I know there's probably nobody in a public company situation in this mix on this call, but they're the ones that are interfacing with the investment houses and talking about future earnings and projections that affect the stock market prices. All right. Alan, we can't hear you.
Rich, I think that's helpful for a lot of folks to understand the differentiation, because based upon the size of the business, you have different needs from a financial perspective. And for a CFOs, generally speaking, are part of the leadership team that are looking forward, as opposed to the folks who do the accounting work, whether they be the controllers or the bookkeepers, who are accounting for and essentially recording the history of the use of the money.
Yeah. So, Alan, I've got a number of people that have reached out with some questions.
Yeah, I see them. Yep.
Shall I try to address some of those?
Yeah, I think we should. And I'd like to do them in the order in which the folks have done it. So Christy Ward had the first question.
Yes. So Christy's question is, let me see, it's continuing to move on me here. Christy's question was about physical repairs. Does it apply to structured equipment or both?
And Christy, I'll unmute you so that you can define more succinctly in terms of what, so Rich can answer appropriately. But bear with me while I bring you up here and find you on my screen, which, there we go.
I'm unmuted. I unmuted myself.
You go. Great. Thanks, Christy. So share your question with Rich, if you would.
Okay. So Rich, part of my question came from the fact that I did in fact receive a small loan, and
is this a PPP loan or an EIDL?
No. I was denied the PPP. I got the EIDL loan. The document that I signed is not exactly clear on what I can use it for. So that part of my question is, so I don't have to worry about structures, but let's say I need to replace, which I do, a piece of equipment. As you know, I'm a photographer. Yeah. So I need to now get rid of an old piece and buy a new piece, which is going to cost 4 times as much as what I'll get for the old piece. Is that allowable under the loan? Or is equipment part of what is excluded in terms of repairs?
Yeah, so from what I've read, my understanding, that is allowable under the EIDL loan, okay, as opposed to a structural repair. Let's say you're in a building and part of the foundation is crumbling, or you need to replace the roof. That would be excluded. But
okay,
repairs to equipment or purchasing new equipment, sure, that's acceptable.
Okay. And I had a second question up there that came a little bit later that maybe you can just keep this in mind. Can you talk a little bit more about what is allowable under the EIDL loan? Because as I said, the document I read was not real clear.
Yeah, so I can only really talk about it in general terms. The guidance has been that it can be used for normal operating expenses. All right, so that could be everything from you know, let's say you've got a fleet of trucks, right, and you've got a 10-year-old truck and it's constantly breaking down. Well, first of all, you can use it to repair those trucks. You could use it for, I don't know, as I said earlier, getting new laptops. Let's say that you don't have the ability to allow people to easily work from home, and you've got some big bulky computers, and you say, you know what, I'm going to change this up. I'm going to get everybody laptops. So maybe when we reopen, people come in 1 day a week, every other day, 3 days a week. So it's more portable. You know, you could use things for that. I've talked about some of the things that have come up in the technology discussions I've been part of to enhance technology things. So again, this is my opinion, they're not looking to put banks out of business. They're not looking to say, here's a loan for 3.75%. Bank loan you can get for 6 or 7. So that's effectively putting banks out of business. That's not what the intent is. It's not use it for things that would be capital or other large expenditures. Okay. Hopefully that helps.
Thank you.
So Karen Frank had a question. Karen, you want to unmute yourself?
Yes, hi. So we received a PPP loan, but before that we applied for the Eidl and we got the $10,000 advance. We didn't move forward and do the other part of the application because we didn't need it.
Yeah.
But that $10,000 is, if I'm forgiven for the PPP, is that $10,000 forgiven or no?
The $10,000 EIDL grant is yours. There's no restrictions. You don't have to apply for forgiveness. It's just yours.
That was a good answer. Thank you.
You're welcome. Very simple.
Okay, great. So I don't have to do anything with that.
No.
And if I don't want to continue with that application, I keep getting emails saying, do you want to further apply? I could just ignore that and just not apply.
Yeah, good question. Those that did apply for the EIDL grant, part of that is the loan process. So I know us included, I've received the email about the EIDL loan. You don't have to complete that if you don't want to apply for that loan.
Okay. I have one other quick question.
Sure.
I do know that vehicles were now put under the utilities. So we have a bunch of work vans that have finance, auto loans on it. Is it just the interest of those loans that's forgiven for the PPP, or is it the whole, like a whole monthly payment?
Okay, so let me try to address that. There has continued to be different guidance on what is meant by utilities and interest. So the vehicle, so let's say you're making lease payments. Those are not under the forgivable area. If you have what's called a capital lease, so at the end of the lease, you will own that vehicle, typically with a very low payout of $1 or so. Under that structure, it's called a capital lease. There's an interest element and there's a principal element. You would be able to deduct the interest piece of those payments, but not the entire payment, all right? The other thing that you touched on is utilities. What the guidance has come out and said is that fuel, gas, diesel, you know, if you have trucks, the fuel elements related to traveling, again, let's say you have a business and people are driving or a fleet of trucks, the fuel costs for those vehicles is includable under the utility costs, much like electric, water, and internet. You know, internet and phones are being considered acceptable utility costs under the PPP.
So if we have like a gas credit card, any of our guys, when they use their gas credit cards, that'll be all forgivable.
Yes. That is submittable as a non-payroll expense under the PPP. Yeah.
Thank you.
You're welcome.
That was helpful.
Cheryl Venezia, you had a question.
Hi, yeah, good morning. It was to continue on to Karen's question. So I just want to clarify, Rich, I thought I had heard early in the process that there was no double dipping. So if you got the Eidl advance, the grant, and a PPP loan, that your advance was going to be deducted from the forgivable amount of the PPP. And that would happen as part of the forgiveness application when you applied for that through the bank. I'm the treasurer for my church. So we got the Eidl advance, we got a PPP loan. We also got approved for an Eidl loan. And so I'm just trying to figure out, what to anticipate for on behalf of that organization with those three elements in play.
Sure. So, Cheryl, I'll say I'm not 100% sure about this, but I've looked at the forgiveness forms and they have changed over the last couple months. I have not seen on there a place to deduct the EIDL grant. My understanding was that if you receive the EIDL grant of up to $10,000, that would be deducted from a EIDL loan they received and not the PPP. But again, I'd have to validate that, but I have not seen a place to deduct EIDL grant, again, that up to that $10,000 from the PPP money.
Okay. All right. Thank you.
You're welcome.
Phil Berg, you had a question.
Yes, hello, good morning. Just a quick, hopefully a quick one for you. So when it comes to the EIDL and
Grant
kind
or
of
the loan?
The grant, similar to Karen, we haven't applied yet and we have 6 FTE. So the concept is, what if we just applied for 6,000, got the grant, and then that was it?
That's perfectly fine. That's perfectly
And we
fine.
wouldn't have to pay it back?
That's correct.
Okay. And the deadline's September 30th?
So the EIDL grant, so I'm not aware that there's a deadline for that. I think they have pushed a bunch of things back. The EIDL grant, initially, they were saying you would get funded within 3 days. The reality is that the system was overwhelmed and many people didn't receive that for 2 or 3 weeks. So, that is supposed to be turned around very quickly. That's supposed to be a quick stopgap resource for small organizations. And again, it's a rather simple process. I believe that application process took me like 15, 20 minutes or so. So it's rather simple.
Okay, great,
Right.
thank you.
Mm-hmm.
Jeff Green, you have a question.
Let me unmute. I think you might have touched on this already briefly, but my question simply was, do expense account reimbursements for employees count as payroll costs for the PPP loan?
No.
No. Okay.
I will tweak that a bit because, again, I've got a number of clients in this situation where the employee is being reimbursed for their health insurance. So let's say there's a situation where somebody comes on board and they have health insurance under a COBRA from a previous employer or some other structure. So it's not under a group plan. As long as there's supporting backup that you're reimbursing them for health insurance costs, that is submittable under the payroll umbrella for the PPP.
Okay.
So oftentimes that is being submitted under an expense report, but it's not like
Travel expense or coffee or.
But again, the travel is deductible as a utility. There's a gas element of the mileage reimbursement of, was it now 57.5 cents per mile? So there's a gas element to that, and I don't know it off the top of my head, but you can find it. I think it's somewhere in the 25 or 28 cents range. So that element, if you're reimbursing people, it's gas, which falls under the utility piece.
Okay.
All right.
Betty Gandelman, you have a question. Betty, you want to unmute yourself? There you go.
The question I have has to do with, well, actually 2 questions. One has to do with if you have a working capital line from your bank will the SBA, because they take a blanket lien, come in behind the bank, so they'll permit you to keep your banking relationship?
Yes, that's my understanding.
Okay. And the other question is, if you have as an operating expense, will they allow you to define receivables you have to write off that are uncollected from companies that are either struggling with the pandemic, gone out of business, that kind of thing?
So I'm not sure that I understand that, Betty. If you've got receivables and you're writing them off, I'm not sure how that relates to the EIDL loan.
Well, what I'm saying is that creates a loss.
Right.
And so can you use that as part of your justification for getting a Eidl loan?
Yes. So the guideline for the EIDL loan is that you have to show economic loss from this pandemic. So that, that would be an example. And examples that I read were not only loss of revenue, but the inability or even the delay in collecting funds from your receivables, right? So let's say that you've got customers that normally pay you in 30 days and all of a sudden they stop paying you. They may not even be out of business, but you're being impacted because your cash flow is less, right? So you're being adversely impacted because of the slowness in cash flow.
Okay, so that's what we kind of thought, but it was hard to get from the forms they sent. So, okay, thanks.
You're welcome.
Okay, I found that very, very interesting because of the nature of the very different questions that I heard based upon some of the other accounting oriented, from accountants in terms of what they're doing. It's very complementary to what Rich does, but a CPA is going to look at this thing from a slightly different perspective. And Rich's knowledge of the internal workings of a company really help him kind of really focus in it, putting on the hat of the owner as opposed to the outside consultant. And I really thank you, Rich, for that perspective.
Sure. Alan, let me just add one other thing that you triggered by what you just said. And we'll talk about the PPP and forgivable money. That is not going to be taxed. Okay, so in 2021, when people are doing their tax returns, there will be modifications in the tax forms. The money that you receive that is forgiven will not be taxed. What is unclear, or what's still being debated and discussed, is whether those expenses that you have, so for payroll, for example, whether or not those will be allowed to be deductible tax expenses on your tax return as a normal business expense, or whether those expenses that you effectively have been reimbursed for will be excluded. So that will have a tax impact that some of the tax practitioners out there will get into, again, once those guidelines have been solidified.
That's been very helpful. Rich, have you put your contact information for everybody in the chat?
Yes, I did.
Great.
And I'm on the chamber website and kind of all over the place. So thank you.
Rich, that's been very, very helpful. What I recognize in terms of looking at the time is that we've spent far more time than I originally anticipated on this aspect of it. But at the same time, I hope that was very, very valuable for people. So I didn't want to interrupt. I wanted to make sure all the questions were answered. What I'd like to do now is, although we didn't take the two topics that we originally planned on, I want to, I just see that Rich Lipton popped up and said, you have a point you want to make, Rich?
Yeah, just the fact, everything Rich Hauser said is totally on point. Rich, you did a great job with it. One of the big things is, in addition to you doing the follow through, is as of now, there's a bill in the Senate, but it's not yet been passed. The expenses, the payroll, the rents, all the things you use the money for are not deductible. They may change, but if it stays as it is, remember we're halfway through the year, businesses are going to have to plan on paying this extra tax because it's the same effect. Not getting a deduction is the same effect as having a taxable income. And as we know now from what Rich Hauser said, if somebody gets, say, $10,000 in PPP grant, to get it forgiven, they have to use up the full amount. And if they use up the full amount, now they have to have some money set aside for the income tax effect of it. So it's really important, in addition to doing everything Rich said, to start planning and having the money set aside so you don't get into trouble next April 15th, you know, possibly July 15th, but hopefully we won't have that issue again.
Right.
With the delay.
Yeah, thanks, Rich. You know, there are so many different considerations that these government stimulus grants and funds have given a business owner that is above and beyond what they worry about on a day-to-day basis about how do you run your business. I urge you to really focus on consulting both someone who has that kind of forward-looking thinking, whether it's a CFO or a CPA, to really get to help guide you to anticipate what the future is going to hold. And I really do appreciate that. And thanks very much, Rich. Both Riches for that. Beyond that, as I was going to say, we had two topics that we were going to cover today, which we don't have the time for. But in anticipation for switching to next month, we had actually put together a poll of what potentially we would love to talk about, you folks would love to talk about next month. And Megan, if you can, could you issue that poll now for folks to take?
Sure. Okay, I'm going to launch the poll.
Great. And then what we'll do is, based upon your selections, that will determine what we're going to cover next month. Now, what I think we may do is Greg and I are going to put our heads together. We may just defer the two other topics that we were going to till next month, but I'm very interested because these topics that we've also looked at may, in point of fact, also tie into that. So this would be very helpful. And as you see, we've got three different questions, and boy, do I see one really outrunning the others here. Wow. Okay, we've got 86% of the people. We've got 12 participants. Okay, we'll give it about another couple of seconds, and then I think if you would, Megan, if you can post the results, I think that'll be great because that looks like where we're at. And let's end the poll. And let's share the results here. And okay, can everybody see the results?
I shared the results.
Great. So as you can see, the one about productivity way outweighed the other two. So I think that's a great topic. Greg and I will put our heads together and see if we can tie that back into the other two topics that we thought we were going to cover today. I think that'll be really great, and I think a lot of people will, this will tie together very nicely. And I'm looking at the time. It is actually 9 o'clock. Rich, and thank you so much for your explanations this morning. I see some comments saying it was very useful. So thank you for taking the time to do that.
You're welcome.
And at the same time, we're now at a point where we know what our topic is for the next meeting, or what you folks want to do that. And then Greg and I will put our heads together that. And now it's time for the leads and connections section of the form. So
okay.
What I'd like to do is go around the room here, and bear with me.
So Alan,
yeah.
I just want to remind everyone, if you can't stay for this portion, please log off Zoom. we do ask if you do stay, if you could stay for the duration of it so that everyone has a chance to share. And also if someone requests a need or a lead, and if someone in that moment has someone, feel free to respond or put your answer in chat so that others can benefit. Okay, I'm turning it back over to you.
I have to leave, but I want to thank you
Okay.
all so much for having me today. I appreciate it. Have a great day.
Thank you,
Great.
Chrissy.
Great.
Bye-bye.
I'm glad. Hopefully it was helpful.
Thank you. Bye-bye.
Okay, let's see what we've got here. We've got, I'm going to do this. Let's see, how do I put my screen the way I need it, which is to get everybody up there so we can go round robin on this. All right, let's start with, okay, Rich Lipton. I'll start with you.
How much time do I get?
I'm going to give you 2 minutes.
2 minutes? Okay.
Yeah.
As most of you know, I'm Rich Lipton of Lipton CPA Associates. We're a full-service CPA firm in Florham Park. We're doing tax, a lot of business consulting right now for people that are confused and need direction, as well as forensic accounting. With all this COVID, we've kind of combined a lot of these skills. We've used our forensic accounting skills to really do a deep dive with our clients in the past few months, to really talk to them, question them, and get them to open up and talk about things that they wouldn't normally say because they just didn't know where to ask the questions. And usually by the end of the first hour, people say, wow, I just feel so much more comfortable, more relaxed because now I have a game plan. And what we're doing is we're taking these issues, seeing whether they should expand their business, cut back, how much they should cut back. If they want to cut back in expenses, we have the expression, dim the lights, but don't shut them. And then also, as I said before, plan on, what the tax effect is going to be, because we may be headed in for a lot worse of a time. Especially for even the established businesses. We do believe it might be an opportunity in the next 2 years for new businesses to start up to fill in the slots. I don't know if anybody here has ever seen my TV show or the TV show that I'm on. It's called Connect SBN, where I talk about all this stuff. I've been invited to be on that show as a weekly guest. The best one is if you want to go on and look at that, connectsbn.com, episode 32. Gives an 8-minute speech of what I'm going to try to squeeze in the 2 minutes here. But really, in a nutshell, is we're just trying to do a deep dive with our clients to put them at ease and handle them now with all these issues. And one last thing is the IRS now is putting out a very strong initiative. We've seen it already for anybody that has not filed the tax return on time or anything doesn't look right. They're in a massive campaign now to raise money and they're serious with it. So we've had a major influx of clients with special problems on that area, which we have to fix. So is that my 2 minutes?
Thanks, Rich. Appreciate it. Allison.
Am I unmuted?
You are.
Okay, awesome. Hi, I'm Allison Distel from Edison Business Solutions, and I am an outsourced CFO. I work with a lot of companies who don't have enough bandwidth to have their own full-time CFO. I do everything up to what we would give to Rich over there. I help them get their financial statements in line. I help with tax prep as far as sales tax and things like that, get the items ready for the accountant. But I also work with a lot of manufacturing companies, and I implement and support a really amazing manufacturing software that works with QuickBooks, which a lot of people like because it gives you the back office of QuickBooks and it gives you the front office of a really amazing, robust accounting and inventory management, distribution management software.
Great. Thank you, Allison. Betty.
Thank you.
Let me just make sure I'm.
You are, we hear you, Betty.
Okay, great, thank you. I'm Betty Gandelman with Rai Funding, and we specialize in alternative lending to companies that are for whatever reason, unbankable, or their banks are just unable to respond in this pandemic to their needs. We've been working with some startups, especially those that have PPE opportunities. We've put together some large purchase order financing. We work primarily with receivables and inventory. We can also work with long-term contracts. And we encourage companies, especially if they're startups or they're going through a transition, to give us a call. We will be able to tell you in a very short conversation if we think we can help you, and if we can't, who might be able to help you. Betty Gandelman, Rai Funding.
Great. Karen.
Good morning. Which way is the other Karen here? Still me?
Yeah, it's you.
Sorry, I didn't want to jump in. Karen Osterticke with Merrill Lynch Bank of America in Bedminster, private wealth management advisor, primarily for a select group of business owners and professionals who, with the business owners, have a very concentrated stock position, and I've been successful in diversifying them out of that concentrated stock position in a tax efficient manner, which has led to other referrals. This was not a path that I had intended to go down, but the referrals come in because of the work that we're doing. It's not me, it's not my brains, it's the team and the resources of the enterprise. So whether it's the investments that we are able to use, or the loans and credit solutions or mortgages from the bank and my business partners, I actually am on a platform for ESG investing. I love it. I do education on it as much as possible. I help people understand that, especially in these socially difficult times, that you can be a stakeholder in the future and not a stockholder in a company. So that makes a difference. Karen Osterticke, wealth advisor with Merrill Lynch Bank of America in Bedminster. Thanks.
Thank you, Karen.
You're
Okay, Cheryl.
Hi, good morning, everybody. I'm Cheryl Venezia. I am with Murphy Business Sales in Madison. We are business brokers, and we specialize in working with small to medium-sized business owners up to $20 million in revenue, helping them develop exit strategy plans and succession plans. I like to call them success plans, to help business owners achieve their goals. And we really specialize in packaging and marketing businesses for the successful transition to new ownership when the time is right for those business owners. So right now I'm really pushing business owners to take stock and take advantage of the services we offer by doing business valuations to let them know what their business is worth in today's market and the impact of COVID to that, to help them really develop that success plan by providing them a potential roadmap of, you know, what they're going to do with their business in the next 3 to 5 years. So good referrals and leads for me are small to medium-sized business owners who are trying to determine their future. CPAs, financial advisors, lawyers, estate planners, all of those close business close advisors to small businesses, business coaches such as Alan. So Cheryl Venezia, Murphy Business Sales. Thanks.
Doug. There we go, Doug.
Gotcha. Morning. My name is Doug Goldstein with the law firm of Spector and Aaronworth. I'm an attorney. I've been practicing in the fields of bankruptcy law and creditor and debtor rights for the past 21 years. I just gave a seminar or presentation a couple of weeks ago with Andrea Diaz, who I'm not sure is on anymore, and Frank Turner on getting through the pandemic. So I help small businesses and individuals on both debtor side and creditor side. So on the debtor side, small business that's being pursued by creditors, I can help them to stop the pursuit by the creditors, help them get a breather and to get their affairs in order. Most of my clients, actually, we do not file bankruptcy for. We pursue a workout, and it's a private settlement between our client and the creditors. But where that's not possible, we can stop the collection with the bankruptcy and help a business to reorganize or an individual to stop a foreclosure sale, wage garnishments. In the area of business, if someone's property, it could be a hotel or a restaurant, is headed to a foreclosure sale, I could stop the sale, allow the business owner to either reorganize and keep the property or to sell the property on their terms. So they're not rushed to sell it in a short sale or in a very quick manner, so they can get the best price possible. My best referral sources are typically accountants, attorneys who don't practice what I do, and just the trusted advisors of people who are running a business and having some challenges. I can give someone up to 5 years to pay taxes that cannot be discharged in bankruptcy. And a lot of taxes, income taxes, can be discharged in bankruptcy, something a lot of people didn't realize, as well as, of course, medical bills, credit cards, personal guarantee on an SBA loan can all be discharged. If you're responsible to pay back a PPP loan, that's dischargeable too. Thank you very much.
Thanks, Doug. Bill.
Good morning, everyone. Bill Scalzitti. My company is Romance by Choice. I am the coach for Romance. I work with a different part of the individuals. I work with their heart and head on trying to get them happy so that they're able to find the love that they've always looked for. So single people, whether they're from 26 to 70 years of age, whether they've never been married, divorced, or widowed, I'm sure we all have friends and acquaintances who are tired of being locked up alone or just tired of the hamster wheel of one bad date after another. I'd appreciate it if you tell them about Romance by Choice. I'd be happy to talk to anyone to see if they are a candidate who would be good for my program. So again, Bill Scalzitti, Romance by Choice. Thank you.
And Greg?
Oh, I didn't know I was going to go. Sorry. Hi,
That's
Greg
all right.
Stewart.
You're on my screen that way. Sorry about that.
Greg Stewart, my firm's name is Next Gen Management, and we take a different approach than Bill does. We don't work from the romance side. We actually work with customers to help them run their business instead of it running them, which has been quite a challenge over the last restructurings and overcoming issues with employees as well as customers on fear factors. So we work with all sized businesses similar to Alan, and actually Alan and I do a lot of business together. So don't be afraid to reach out to your other folks.
I'm fond of saying that Greg is my partner in crime. Debbie.
That's some crime unit, that's for sure.
That's
Hey,
why we're looking for bail.
You know, you could call me anytime, Greg and Alan and anyone. Debbie Walpov, Merck's Payments, Expert Payment Exchange. Most of you know I help businesses take credit card payments. Yesterday when I was talking to Megan, we were talking about speakers, which she mentioned. So that's one of my asks today. If you know a leader that has been outstanding during this pandemic, in real estate, in really any sector, and as well as an economist, I'm helping Megan and the team with speakers in the future from my expertise from the Women in Business program, which I chaired for 3 years. I don't know why my voice is crumbling. And the other thing that Megan mentioned, which I'd like to mention to you, is that she's working with small businesses. You know, COVID has really hurt the small business. They were closed. They have outdated technology. And so my goal is to help make a difference. So if they need help getting online, you know, upgrading their solutions to contactless, scanning, etc. If they don't even know where to start, I work with several different processors. So I don't just shove one solution down their throat. I work as, you know, on a consultative basis, usually with their business owner, their outsourced CFO, accountants, and their in-house controllers. And I'm just looking to make a difference and help us get through this together. So, Debbie,
you know, it's interesting because what Debbie's saying is you actually can use EIDL funds for upgrading your technology. And if it's in the way of payment solutions, would be worthwhile having a conversation with Debbie.
Hey, Debbie, it's Karen Osterticky. I sent you a private chat, but if you connect with me and let me know exactly what you need in terms of somebody with an economy background or economist, I have a few people that I might be able to suggest for you.
Great. Sean.
Good morning, everyone. Actually, I think this is my first meeting, so nice to meet everybody here. I'm Sean Tai. I'm a private wealth advisor, certified financial planner for UBS Private Wealth Management. Really what we do is provide financial planning and investment advice to retail investors. What I like to say is we try to provide institutional advice to the retail client. What I've really been having conversations about in this time is the transfer of wealth from one generation to the next. So over the next 10 to 15 years, we're going to have this massive transition of wealth. And I try to provide advice to the next generation and really educate them about that. What else we do? 401k consultant, we'll look at your 401k plan or retirement plan, see if we can reduce the cost in any way and provide advice beyond that plan. So good referrals for me would be, CPAs and estate attorneys always looking to connect, and then younger people in transition and looking for advice, whether it be student debt or college planning. That's it.
Great, thanks. Rich Hauser.
Sure. Good morning again. So the name of my company is Rai CFO, Controller and Bookkeeping. Again, we are an entire accounting department function. I'm going to touch on a few recent opportunities that have been brought. The financial planners out there have brought a number of opportunities. In both instances, they are some older business owners. In one case, a father who's got two sons in the business. His second wife has been doing the bookkeeping for many years. The sons are very uncomfortable with that information and not willing to buy the business. So the financial planners introduced us to help to clean up the internal accounting books, to get a valid picture of what's really going on, and then to hopefully do a deal with the sons to buy them. Totally different situation. An owner, again, has no idea what is going on internally. Hasn't seen financial statements in over a year. He is also an older gentleman and planning an exit strategy. So the financial planner brought us in to help, to hopefully engage us to do some of that cleanup work and get the owner to a goal. So financial planners are a good resource. CPA firms are a great referral source. Our targets are 3 to 4 employees on the low end, 300,000 or 400,000 revenue, up to 70, 80 employees, 20, 25 million in revenue. Geography is a non-issue for us. All right, Rich Hauser, Rai CFO, Controller and Bookkeeping. Thank you.
And I'm Al. Thank you all for attending. I'm Alan Berger with Berger Business Advisors. And what Rich just talked about is actually one of our specialties. And we look at it from the standpoint of putting together a transition plan for a transition, which we know can't happen overnight. What Rich does is extremely complementary to what we do, and it's a necessary component. But together with CPAs and financial advisors and other trusted advisors to a business owner, what we help them do is figure out what that transition plan is going to be, what it should look like, what the time period is going to be that feels comfortable with everybody, align the thinking of all of the people who are involved in that transition, and then act as their accountability partner to make sure they do what they say they are committed to do. I'm Alan Berger with Berger Business Advisors, and I thank you all for attending us. And remember, our next meeting will switch from that point forward to the second Thursday of every month, and we will look forward to taking the topics you shared with us and melding that toward creating another agenda. But our goal is, if you have any other ideas, this is your forum. So Greg and I are committed to trying to figure out how to take what you want to know, what you want to learn, and what you want to share with other folks, and put it together into a meaningful conversation for other business owners and leaders in the chamber. Megan, any final thoughts?
No, Alan, thank you, everyone. Have a wonderful day.
And everybody have a great day.
Thanks. Bye, everybody.
Bye-bye.
Thank you.
Bye.